Welcome back to ICT Trading Concept. How are you all? I hope everyone is fine, friends. So, this Monday I have described macro and also I explained the Monday price action, Tuesday price action. I hope you have already watched the video. Now I'm gonna describe about the Wednesday price action. I hope it's building your confidence by for using this macro strategies. And in my opinion, if you can understand, if you follow every rules, this only strategy is more than enough for being profitable. I hope it's clear now. So let's go to the market. So viewers, here is the 15-minute chart from Nasdaq, Wednesday 27 September 2023. So I'll go step by step and I will go every four macro. I will show you how this macro strategy works, and it actually worked in Wednesday. I have already shown you in Monday and Tuesday price action. So here is the market, and you can see this is the current market price. Above the price, this is the last swing high. If you mark this high, this is the swing high. But I will go to this swing high. Why? The reason is, if you see closely, this swing high and this swing high, they have made the equal highs. That's why I love to make mark the swing highs. They are almost the same or relatively equal. And if you see clearly, this is the swing low below the market price. So 5 minutes, 15 minutes is done. Let's go to the 5 minute. If you look at the 5 minute chart, it is also the same. And if you'd like to mark this one, you can do it. And that's all. But this is the swing low below the market price. This is the clear swing low. Now let's go to the 1 minute chart, and I'm using the reply mode. And here is my 950, and there is your 10 macro. Okay, if you look, this swing high actually made the equal highs, and this swing low has just, I just marked it, so nothing is significant over here. It has actually also made the equal lows from all of this place. So this is also the equal low. Right now, in 1 minute chart, I can see market has cleared all of this buy side liquidity. So my expectation is, when it will go inside the macro, then it will clear some buy side liquidity, then give me the nice market structure shift for this swing low. Or it will go lower and it will clear the sell side liquidity, then give me the market structure shift, it will go for the equal highs. So we will see. We don't know where the price will go. This is the thing, guys. You don't need to know where price will go, but you can just make some idea after watching the price in from 1 minute, what price did just before go inside the macro. So it is clear that it has actually cleaned the buy side liquidity right now. So my expectation is it will go for the sell side. Okay, do you understand the reason? Another thing is, guys, if you have watched the video from my YouTube channel, high probability entry versus low probability entry, you will know from that, uh, the video, this is my high probability entry. So though I'm gonna talk about the macros only, but if you would like to go outside of these macro rules, then you could see this is my I fair value gap, and I marked it live in my Twitter account. So it's not hindsight. If you are with me in the Twitter, you already know that when price was over here, I have made the screenshot and uploaded it about this entry. So let's see what price did actually, and it actually go through this fair value gap. Now this fair value gap is the I fair value gap, and I was expecting market to go over there and then here. This is high probability entry depending on that strategy, but I will talk about the macros. One thing I would like to add is, in my macros video, from the rules, I told you that it will go and clean some liquidity first, then give me the market structure shift. There is something else I forgot to tell you, and that is, price actually go for two reasons. Either it will go to clear the buy side or sell side liquidity, or it will go to trade the fair value gap. So clearing the buy side or sell side liquidity, it is also meaning if it would like to go lower, it can go high and trade some specific gap, then it will give you a very nice market structure shift. All Everything is depending on the market structure shift. This is the main thing. Okay, liquidity taken and the fair value gap trade, that is the first thing. It has to do one of the two things when it will go inside the macro. And the second thing is the market structure shift. When you will see very nice, clean, and energetic market structure shift inside the macro, you can say market will go that way. Okay, so let's see what price did actually. So here is 950. The macro has started and price went to the I fair value gap. If you would like to take your entry depending on my high probability videos, then you are in the market already. So here would be your entry, and your stop loss will be just above the the last bear candle. You can put it here or above the swing high. It depends on you. So there is market consolidating, and then it went above. I would like to show you something here. If you see closely, there is a very small gap. Price went above to that gap. It has traded this gap actually. So in my opinion, the macro has done its liquidity rules over there. Now it gave me the market structure shift. Do you see, guys? This market structure shift is very energetic, and you see this low. This is the market structure shift. So when you will see this type of market structure shift, you can easily expect that market will go lower. This is the easiest thing of this macro. That means when you will see the market structure shift, you can easily expect that market will go lower. But before the market structure shift, you have to have some liquidity taken or the fair value gap trading. Okay, so I forget it. I'm really sorry. Uh, Price can go up to to trade any gap as well, not only for liquidity taking, because some of you can say, how do I know that it has actually traded it cleared the liquidity? This is only 20 candle, guys, only 21-minute candle. So in this 20 candle, it will make some liquidity and it will clear the liquidity. In my opinion, if I can see some 1 minute equal high, maybe it will make by 2 or 3 candle, and they make equal, then it cleared the liquidity. That is also my liquidity taken, but it's a deep conversation. Right now, if you see any very nice clean liquidity taken, you can go for that. Or if you see a very nice fair value gap trading, and then after that, if you see this type of market structure shift with a fair value gap, you can go for the short. So this is for your further information. So let's see what price did. And there. Okay, so there should be your entry. Let me just put my entry over there. There should be your entry, and your stop loss will be over here. As per rules, your profit target should be here. Okay, so you are in the market already. Let's see, and boom, the very next candle, you have done your job. You can ask, but why 20 handle, only 20 handle? Guys, if one contract is $50, you can actually calculate your 20 handle with $50. It's near about $1,000. So it's not not a small money. And when you will see this type of entry, this is also complicated. I will show you the easiest one. It happened yesterday actually. So if you see, most of the time you are right, then you don't need to care about the losing trade. Okay, you will get some losing trade. Obviously you will get some losing trade, but if you count out of 10, you will get 7 time winning trade. So that's why I actually don't care about the stop loss or some losing trade. I really don't care about it. I always get mentally prepared that I will take the losing trade, but I don't actually really think about that always I will get losing trade, because I know this macro will work 80% or 70% time, uh, to the winning side. So that was the morning session, and you see at last it has actually cleared the liquidity from here. This is the first macro, 950 to 1010. Now I'll go to the 1050 to 1110 macro. So let's go over there. So here is your 1050 to 1110 macro. I'm again to the 15-minute chart for Nasdaq, and I'm gonna mark the last swing low. This is my last swing low, and I keep the equal highs because it's still intact. It didn't breach by the price. So this is my last swing high, and this is my last swing low. I don't need to go to the 5-minute chart. I'll go directly to the 1-minute chart, and there is your macro. Just guys, my bird is actually barking, so I know he's just making some noise. I'm really sorry for that. I really love him, so I can't just put her into the in a dark room so that he won't call or something. I don't know what is the exact English. He's just shouting. I'm really sorry for that. If you have facing the problem, I'm really sorry for that. So there is your macro 1050 to 1110 macro, and I have marked my buy side liquidity over there. I have marked my sell side liquidity over here. Now I will see actually what price did to the 1-minute chart. If you look closely, it has actually what it did. It has cleared the sell side liquidity right now. Here you see this low has cleared the sell side liquidity, all of the sell side liquidity, last swing low. Okay, and this swing low actually traded somewhere here, or if you see, you can say that it has made actually the equal highs over there. This is from on mid. This is relatively equal high. Overall, this is the price action right now. So my expectation is it will go higher. Why? It's because it has first cleared the buy side liquidity from the morning macro, that means 950 to 1010 macro, then it went lower, and as you already know, it has cleared the sell side liquidity from the 950 1010 macro, then started to go higher. So my expectation is it will go higher and clear at least this buy side liquidity or above over here. So let's see what happens to the macro session. This is the 1050. Already the macro has started, and the first candle went below. Look, the second candle went below. You have nothing to do over here, but if you see closely, it actually cleared this liquidity. It's cleared this liquidity. So now I will wait for market structure shift so that price can go above this swing high. I mean the relatively equal high or this high. Okay, that is my expectation. I don't know what will happen. It went little bit lower, lower, and lower, and there. Yesterday when I was live to the not live, I was just tweeting to my Twitter. Some of you actually asked me, this is your market structure shift, and that is your fair value gap. So if market can come to this fair value gap, you will take your buy, and your target will be 20 handle for the macro actually. And I told you that, guys, I didn't see any market structure shift over here. Why did I tell you that? Though it actually made the rules, it has cleared the sell side liquidity, and my expectation is it will go to the relatively equal high. It has nicely, very energetic run and gave me the fair value gap. If you see little bit higher further, there it has actually traded this fair value gap nicely, went higher. Still now I didn't have any market structure shift. Why I told you that I'm not seeing here any market structure shift? The reason is, for for being eligible as a swing high to shift the market structure, there is two rules. First of all, this high, there is, although there is no swing high, actually there is nothing, but if you see closely, this swing high didn't trade any fair value gap over here, or there is no swing low, I mean the swing high lower than this swing high on its both of side. That means it didn't actually meet any of the rules for being a eligible market structure shift swing high. Then if you see, it has actually given me a very nice run, and then it went higher. You can see, like, maybe it went little bit higher, whatever. It's also made the job. It went near about 45 handle, but I'm not agree with taking this entry. If you are if you would like to take your entry depending on the macro strategy or any type of strategy, there is no market structure shift. Guys, maybe this time it worked. It went to the fair value gap and went higher. But in time, you will see most of the time you will be, you will take the losing trade. Like it will go trade here, it will go a little bit higher, then it will go again lower because this there is no market structure shift. Sometimes you will get this type of movement and you will think, oh, I'm lucky. But no, guys, you have to depend on your rules. Yeah, I could say you that see the macro works very beautifully over here. It went, it cleared the sell side liquidity, then it gave you the market structure shift. It traded the fair value gap, then went higher. See, this strategy works very well, but I'm not that type of person. I don't care about your likes, your comment, your subscribing, nothing. I really care about you. I don't want to give you something who is actually, you know, not good for you. It will harm you in your later life. I want you to be a consistent profitable trader, not one trade. You will take one trade and will be profitable, then you will take so many losing trade. I don't want that. I want you to take always the profitable trade. Okay, yeah, I know nothing is 100% certain in trading. You will get some losing trade as well. I took the losing trade. It's simple, but I want you to take most of the time the winning trade. That is my goal. So that's why I cleared this entry is not valid. If I were selfish, I know it's I shouldn't talk like that way, but if I were selfish, I would say you that see how beautifully it worked. My macro strategy, you see, it's not my strategy, it's ICT's strategy. I'm just explaining it. So I would say, you see how beautifully it worked over here, but I am not going to say. If you see this type of confusing market structure shift, you will avoid this one. Trust me, guys, you will be benefited. Maybe this time you are right. Most of the time you will see you are wrong. So please, this is a request. Please avoid this type of market structure shift or confusing market structure shift and taking entry. Okay. So let's go to the PM session. This is the morning session. So if you look very closely in the morning session, you could take this entry. That means the 950 to 1010 entry that was valid, but this one is not valid. That means I wouldn't go for this macro strategy entry. Okay. Now let's go to the PM session. So guys, here is your PM session. That means just before 150 to 210 macro. I'm here. If you see, look at the price. This is my last price, and before my last price there is no swing low below the last price. So I won't go for this trade. Okay, when I was tweeting, some of you asked me after watching the price, why bro, why didn't this one is market structure shift, why isn't you taking this entry? I will explain it right now. Let me go to the 1 minute chart. From 1 minute chart, actually let me go to the 5 minute chart first. If you see this week, I marked the swing consequent encroachment of this week. So this is that consequent encroachment of the week. Now you can say, brother, it has take the sell side liquidity also to read the consequent encroachment, then gave you the market structure shift. Why wouldn't you go for buy now and your target won't be here? Why you won't do it? When you will be in the market, you have to first understand the price, what it would like to do. If you go to the 15 minute chart, I know guys it's gonna be little bit longer video, but it's very important for you to understand. If you go to the 15 minute chart, you will see it has built some liquidity, went lower to this did this daily fair value gap. If you go to the 5 minute chart, it was just falling, and here it was just consolidating. How do you know that market will go higher? It won't go lower. How do you know? Yeah, after effect, or if you just guess, you can say, like, I will show you. This is very important. See, market went so fast, very energetic run. It has traded this fair value gap. If you say this is the fair value gap, so let me just clear this one is no need. This is outside of macro, guys, but I need to talk about this. This is your market structure shift. So this is a market structure shift. It has cleared all of this liquidity, also traded the fair value gap, then also the consequent encroachment. All of these are, your confluences that market will go higher. and then it has nicely traded to the fair value gap, started to go higher. So why I won't take this entry? I could take this entry rather, but I didn't read the price. I don't know that price will go lower. It went above there to clear the buy side liquidity first, then gave me the, it will go lower. I didn't know that. But after effect, I mean, when the price is already printed, I saw that was a very good run. But I'm not, afraid of missing trade. Now I have an, confident that market will actually go higher. If you go to the 5 minute chart and if you look at this, now I have a confluences from higher time frame. That means it has cleared all of the liquidity from here, then gave me a very nice market structure shift. If you see from the 5 minute chart, market structure shift over there. Now I can say that market will go to the buy side liquidity. But before this candle, before printed this candle, I didn't know that market will go higher or lower. So you have to do some framework first. When you will know where price could go, then you will take your entry. Before that, if you just see there is a very nice fair value gap and you just take entry, this is not for the consistent profitable trader. This is for someone who love to gamble, who just want to come to the market and would like to take some entry, get some profit and go away. Bro, this doesn't work that way. If you are trading for some days, you will know, you will take one entry, profitable entry, then you will take so many losing entry. Why? The reason is that you don't read the price. First you have to read the price. Now there is a direction, right now I have a direction. Price was here, it went lower, and then gave me this very nice market structure shift. If you look at the 1 minute chart, it is also from 1 minute chart. If you look at the 15 minute chart, this is also from the 15 minute chart, 5 minute chart. Now I have a direction, okay, and I'm talking about outside of the macro. So this is not related with the macro, this is outside of the macro, because so many of you actually tweeted me yesterday and messaged me as well, not only replied to my tweet. You also messaged me that why I didn't take this entry. This was a very nice entry and that was a very clean run. I told you guys I will show you why I didn't take it, and then later, you have watched the first video I placed before beginning this video. That was my entry over here, and I show you that if you just wait for reading the market price, you will get better opportunity, and you can confidently take the entry for your winning trade. So this run, I don't care. It actually gave me the direction where price would like to go. Now I know where price will go. But when price was over here, also below the monthly fair value gap high, also it was trading inside the daily fair value gap, I didn't know that it will go higher. It could easily go above and cleared all of this buy side liquidity, then reversed. It could go to the consequent encroachment of the daily fair value gap. How do you know where price will go over there? But now you have confident that market will go lower. It will trade any kind of fair value gap, I mean the 5 minute fair value gap, then it will go to this, I mean, buy side liquidity. Now you have a direction. That's why it's important. So I don't want to talk more. I'll just mark this low as my 15-minute fair value gap low. I mean the 15-minute low for the 150, sorry, 250 to 310 macro, and I will go faster over there. This is your, I mean, this is your 250 macro. Okay, so right there, that is your 250 macro. I'll just clean this all and also this one. I don't need all of them. I'll just mark this low. Also, this is not important right now. Now, the macro will be start from 250 to 310. Okay, this is the last macro from yesterday. I'll show you what it happened, what it did over there. I took this entry and I posted it to my Twitter, as well as I add this video at the beginning of this today's market analysis. Okay, so when price was over there, what it did before, you see, just before it has cleared all of this liquidity, I have already showed you, then it went higher and it's very near to the relatively equal high. So what should be your expectation? It has already cleared the sell side liquidity and it's near the buy side liquidity, the I mean the relatively equal highs. What is your expectation? Now let's see what price did when price was over there. And guys, it's very important. One macro is for 21-minute candle only 20 candle. So you have to read every candle. You see, this is inside the macro. I'm already inside the macro. The next candle was there, and then there, and then over there. Okay, now I will show you something. See closely. See this low and this low, they are the relatively equal low. So this price actually cleared the liquidity from there. Forget that. Okay, wait, there is no market structure shift yet. Nothing. We are inside the macro. Wait, there. You see this candle? Is it energetic? Tell me, guys, is it energetic or not? Okay, it has met all the requirement. I mean, for shifting the market structure. If you think this is not your market structure, okay, no problem. This is your market structure shift. It has a swing low on, I mean, the swing high on its right, and it has so many swing lows, so many swing lows in its left. So this is a valid swing low, I mean the swing high for shifting the market structure. So market has shifted over there. It has cleared the equal lows. There is a very nice fair value gap. You don't need to, you know, make your chart like that way to see that. I mean the fair value gap. You can see it easily if you just place your market. You can see it easily over there. Is this? Now I will wait to go market to this fair value gap. I will show you. See, though it didn't touch it, but when I was watching the market, I saw it has just tapped to the upper level of the, what can I say, the fair value gap. Okay, so I took my entry over there, and I have already posted this video. I took my entry over there. My stop loss is just below this swing low, and your rules is you will go for 20 handle. Okay, so you are in the market, and boom, you are already out of the market. But I wait for this buy side liquidity, and I had just waited, and boom, there. Okay, so it has traded over there. So that was the PM session entry. So if you watch all of the video, then you know there are four macro. The first macro 950 to 1010 macro, we had a very nice setup at 11 1050. I mean the 10 macro. Then 11 macro, there was some confusion about market structure shift. At 2 macro, there was no swing low, so we didn't have any, I mean the trade over there. And the last macro, nicely we got it. This is very, beginning of this strategy. Okay, you already know for 3 days only. I think I explained it for 3 days only. So it's very at the fastest stage. You need some time. You just give it some time, then you will know how actually mark the liquidity taken and how you will mark the market structure shift. Give me 1 month, guys. You will earn million of dollars from trading. Don't you give me 1 month for learning a strategy? I showed you. I took two trade only. Yeah, I took another trade actually at 1150. Sorry, 1250 to 110 macro. It was from here. So I took one entry over there. That is another topics. I mean that macro actually follow another rules. So I took two entry. For one is here, one is there, and that two was profitable entry. So why guys are rushing? Why you are rushing, guys? Just give me some times. Stay with me. I will explain every day's macro. You will see it works every day. Maybe today you didn't see this is a liquidity taken. Maybe you were waiting to take the liquidity from here, or you saw that this is your liquidity taken, then it will give you the market structure shift lower part. Instead of that, market went higher. All of this thing, this is your first stress. That's why you are confusing about this. When you will be with me for some days, maybe 1 month, maybe 2 months, just give me this little time. You will learn this strategy, guys. If you just can understand only this 4 macro, guys, how many time it will be? Like 1 hour 20 minute. So in 1 hour 20 minute, you will get 4 chance to take entry, either 4 chance or 1 chance, at least 1 chance you will get to take your entry. And isn't it enough? 20 handle with $50, it's near about $1,000, guys. If you use 10 handle, I mean the 10 contract, it's $10,000. So that's all for today. I hope it will be insightful for you. If you are new, please subscribe to my channel, and if you love my content, give me a thumbs up, share my videos. So see you guys. Bye bye.